Good afternoon and welcome to the 2021 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me once again on this Wednesday, Hump Day, July 28, 2021. Hope everyone is having a blessed day so far and that everything is going well. I just wanted to give you a recap of the Fed Chair Jerome Powell's press conference, his meeting on interest rates and on other factors of the economy. And also, there's word that the infrastructure bill, the vote on that is happening tonight or tomorrow, and that looks to be getting some bipartisan support. But in the meantime, this economy, ladies and gentlemen, is slowly stagnating as the earnings season come out. A couple of companies are bringing their earnings out today and tomorrow, and no matter, despite what the stock market does, the economy on the ground is still has a long way away from recovery. And Fed Chair Jerome Powell did note that the Fed dual mandates of stable prices and maximum employment, that they're a long way away from that, making substantial progress. And so either way you dice it, the recovery is going to take 10 years. Or if you think that things are going to go downhill quickly, that's going to take 5 years for the Fed to raise rates at any event. And so initially, most of us had thought that right now the Fed will be raising the interest rates. But today, of course, no surprise, they're not going to raise interest rates with the spread of the Delta variant going on right now. And they're not going to taper the monthly bond purchases of $120 billion. They're not going to do that. So the central bank decided not to raise interest rates from near zero, no surprise there, nor adjust the pace at which the government buys bonds each month. It's just not a good time, according to Powell. And he said he thinks, quote, "I think we're some way away from having substantial progress toward the maximum employment goal." I should say so. Unemployment is still running at 6.2% for those of you keeping track. And they get the meeting minutes here. And the thing is that they're not considering cutting its purchases on mortgage-backed securities. And that would also indicate that the housing market would be cooling, but they're trying to keep prices stable in the housing market. But with this rental and eviction moratorium going on, they didn't mention anything about that. How is that going to be affected? And these meeting minutes that I'm looking at is courtesy of CNBC.com. That's when he came on and spoke. Everybody paused, and breaking news, as you know, and they spoke around this time, around 2 p.m. Eastern time here. And the thing is, he didn't mention anything about the housing crisis in terms of the eviction moratorium and the rental moratorium situation. He only stated that they will set up some credit market to help those low-income folks, and also to help those on that spectrum. But they didn't say the timeline, and they didn't say what type of services they're going to be providing to help people in the next week or two for that. But they're going to leave it to the states to decide, basically. So now the trade deficit in goods climbs 3.5% in June to $91 billion and hits another record high. This is another sign of the effect of the globalism economy that we're in now, the New World Order economy that we're in, where the Western world produces nothing but takes up a lot of resources, buying a lot of resources, and consumes a lot. But at the same time, automation, as you know, and robotic activity is replacing a lot of the workers' jobs that we had in the old economy. And the new economy is going to be based more on digital work and a bunch of things like that. But that cannot make up for the trade deficit. At the heart of any economy is production. And that's one thing that Ray Dalio said, and other major economists have said, and they're absolutely right. At the heart of any economy is production, and we don't have production. We have a trade deficit over here. And President Biden today spoke at a Mack truck plant in Pennsylvania. He was over in the Lehigh Valley, south of Allentown and Scranton and all of that, speaking about the need for the infrastructure bill to be passed. And he was so surprised. You just see a look of surprise on his face as he toured the facilities. He saw some trucks, some electric garbage trucks, and some other trucks, as he pushes the new Buy American efforts and advocates for government investments in clean energy as a way to strengthen U.S. manufacturing. The news is that U.S. manufacturing is going to take at least 10 to 12 years to recover, to Buy American, to bring these jobs back home to Americans, and not to mention all of our soldiers that are coming home from Afghanistan, that, of course, they've signed that bill as well, and other areas. So the government has a lot on its plate. They're going to be dealing with a $28.5 trillion debt that's going to only grow as we service to try to revamp this infrastructure. And the thing about it here that makes it so crazy is that they're going to have to pay for this while at the same time we're going to be in a depression. So how are you going to bring jobs back and increase jobs? Even the Fed Chair Jerome Powell said that we're a long way away from full employment. So how are we going to increase jobs and productivity while at the same time paying for the deficit and the wars that we were in for the last 21 years of this economy? So it's just spells a lot of trouble for either way you look at it. And one thing I have to give credit for, Federal Chairman Jerome Powell did mention that. He did say that we're a long way away from full employment and a long way away from recovery. So he did note that, although, obviously he has to keep everything at zero. He can't raise rates. But at this point, they would like to raise rates. But we're looking at probably raising rates not until next year, summertime, 2022, unfortunately. As right here, the second half of 2022, right as the midterm races become more intense, that's when the Federal Reserve Bank will make its move to raise it probably a quarter of a percentage point, nothing high, but that will be just enough to drop the economy back into a depression. And not counting the lockdowns that we're going to have. We could either have a lockdown this winter. Winter is coming for President Biden, so a lockdown could be coming as early as October, November of this year. Next year, after New Year's at the latest. And not surprisingly, it could be sometime in early January, just before, just like we had the insurrections in January 6th. So we could have a lockdown issued by President Biden, if all these variants and everything doesn't subside and this economy gets even worse through the wintertime, because that manufacturing jobs has a long way to go. We know that this economy is still suffering from the effects of this pandemic and also from the effects of debt and spending. We're over leveraged and we don't have much money to pay for all of these things. So look forward to the $1.9 trillion infrastructure package passing either tonight or tomorrow, sometime tomorrow, by bipartisan effort. It's not unclear if they're going to parlay this down, the 1.9 trillion down to like a 1 trillion for even bill. But we'll have to wait to see for that. But I just wanted to bring you up to date on that news today. Appreciate your continued support. Please stay tuned for further updates and have a blessed day.